Hi, there a lot of talk lately about what old 90% silver is actually worth when you try to sell it, because a lot of people glance at the silver price, glance at a bag of dimes and quarters, and assume those two things should line up almost perfectly. So in this video, we're going to separate expectation from reality, and you are going to walk away a whole lot smarter before you sell a single coin. It is Saturday, April 18th in New York, so comment below what day and date you're watching from. And real quick, if you value the work I put into these videos, support the channel by subscribing and comment John AG Best down below. That helps more than people think. Now, in case you haven't seen how weird this market has gotten, the basic setup is simple. Somebody starts calling coin shops and asking a normal question. Hey, do you buy old silver dimes, quarters, and half dollars? The answer sounds friendly enough. Yeah, we buy them. Sure, bring them in. We're paying on them right now, and then the actual number lands. One place comes in around the low 40s per dollar of face value. Another place gives a quote down in the low to mid 30s. Another says, more or less, look, we're somewhere around 70% of melt. Then a larger buyer, somebody who wants a much bigger lot, gives a cleaner quote, but even that one still ends up far enough behind the silver price to make a seller sit there and wonder whether the whole market is upside down. That's the shock. Because the screen says silver is expensive. Depending on which benchmark you're watching, you're talking high 70s to low 80s right now, not some bargain basement metal that nobody cares about. So the average person hears that and assumes every form of silver is getting treated like a celebrity. But that is not how real-world liquidation works. The metal can be hot while one little corner of the physical market feels cold as ice. And once you start stacking these offers next to each other, what jumps out is not one goofy bid from one random shop. It's the pattern. Multiple offers, multiple buyers, a spread that keeps showing up again and again, not pennies off, not a tiny haircut. We're talking about a gap big enough to make a seller stop mid-sentence and say, hold on, run that by me one more time. Now, before we go too far, let me say this very clearly. That does not automatically mean every coin shop is trying to rob people blind. Some offers are lazy, some are defensive, some are opportunistic, and some are just a business reacting to a market that has become awkward, slow, and harder to move than the silver headline would suggest. If you miss that distinction, you can misread the entire situation. So let's take it apart piece by piece. The first instinct most sellers have is to compare the quote to spot. Totally normal. If silver is worth a lot, then old silver coins should be worth a lot. End of story. But in practice, old 90% is not just silver weight. It is silver weight plus sorting, plus counting, plus handling, plus condition issues, plus inventory risk, plus the question of how quickly the dealer can get rid of it after he buys it from you. That last part matters more than most people realize. If a shop can buy a clean modern bullion product and turn it around quickly, that product will often get treated better than a bag of worn circulation coins, even when the silver content math says the gap shouldn't be that wide. Why? Because the dealer isn't just buying silver. He's buying future work. He's buying a future customer. He's buying a future headache. And if that headache feels bigger than usual, the bid drops. That's why one of the most important things in this whole story is not the exact worst quote. It's the average. Because a single bad number can be shrugged off. 10 bad numbers start to sound like a market condition. And when the average spread starts coming back around the low 20s behind melt, that's where people start saying, okay, something here is clearly broken, especially when the better looking offer still isn't exactly generous. The larger volume buyer is interesting for that reason. On the surface, you think, well, maybe the big buyer saves the day. Maybe size gets you dramatically better pricing. Maybe once you get into real volume, the market suddenly looks normal again. But then you hear the structure. They want a serious minimum. They're not really built for somebody with a little stash in a drawer. And even at that bigger size, the quote still comes in far enough behind melt that you don't exactly feel like you found the promised land. That is a major clue, because it suggests the problem is not just small local shops being sleepy or sloppy. Even buyers operating more like a pipeline business are still leaving a lot of room between what silver is doing and what old coin sellers are hearing on the phone. Now, based on recently published numbers, silver's broader supply picture is not exactly loose and carefree either. U.S. mine production last year was only a little over 1,000 metric tons, and most domestic silver still comes as a byproduct from other mining operations, rather than from a giant army of pure silver mines that can instantly crank up output whenever the market feels tight. The same government summary also shows the country still leans on imports for a bit over 3/4 of apparent consumption, with demand spread across electronics, industrial use, bars, photovoltaics, and coins and metals. So the bigger silver story is not one of effortless abundance. And one more detail. That same government summary shows silver demand is spread across several lanes at once. Electronics take the biggest slice. Other industrial uses matter. Bars matter, solar matters. Coins and metals matter too, but they are only one lane in a much wider highway. So when somebody says silver is in demand, that statement can be true while your specific product is still struggling to find a bid at the local level. That's a mental shift for sellers. Strength in the metal does not guarantee strength in every wrapper the metal comes in. A strong industrial backdrop can help silver while old U.S. coinage still trades like a product dealers have to work harder to move and finance. Once you understand that, these ugly buyback spreads stop looking random and start looking like a market sorting products by ease of resale. And that's exactly why this old coin weakness stands out. If the broader metal story were collapsing, then sure, weak buyback prices would make perfect sense. But that's not what the data say. Silver was even added to the latest U.S. critical minerals list, which tells you policymakers see strategic importance in the material itself. That doesn't mean your old dimes magically get bid at full melt tomorrow morning, but it does tell you the underlying metal is not some abandoned relic nobody needs anymore. So what gives? Well, the popular explanation goes something like this. Last year, silver ran up, a lot of people rushed to cash in old coinage and scrap. That material flooded into shops, then into larger buyers, then into refiners, and somewhere down the line the system got jammed. Refiners got overloaded. Some buyers stopped taking certain categories. Others widened their spreads. The logjam rolled back uphill, and by the time the number reached the person standing at the counter with a bag of quarters, the offer looked ugly. There's a lot of truth in that. Markets do clog up, downstream buyers do step back, and when the exits get narrower, retail buybacks absolutely get worse. But here's the part I want to challenge, because this is where I think people can get too comfortable with the easy explanation. That bottleneck story explains how the market got hit. It does not fully explain why offers can still look this bad right now, because from recent market updates, the downstream world is not frozen in the same way it was during the worst of that strain. Material is moving again. Buyers are active again. Not perfectly, not all at once, but enough that you can't just wave away every ugly quote by saying, well, the pipeline's clogged, what can you do? That's not the full story anymore. I think the deeper issue now is demand preference. Old 90% is a specific product. Some seasons everybody wants it because it's recognizable, divisible, and nostalgic. Other seasons buyers lean toward rounds, bars, eagles, or whatever feels cleaner, shinier, more standardized, and easier to compare online. Same silver. Different appetite, different liquidity, different spread. And appetite is everything. If the average retail buyer walking into a store would rather grab modern bullion than a bag of circulated coins, the dealer knows that. If online turnover is slower on old coinage than on freshly minted product, the dealer knows that too. So the bid doesn't just reflect melt, it reflects how annoying the inventory feels. That doesn't make every low quote fair. But it does mean not every low quote is proof of foul play. That's the skeptical counterpoint I think people need to hear. Because it's emotionally satisfying to say these shops are all just lowballing on purpose, case closed, and sure, some of them probably are. But if you stop there, you learn nothing useful. You need to know whether you're looking at greed, weekend demand, slow turnover, replacement risk, or some combination of all three. Otherwise, you're just angry, and angry sellers do dumb things. They take the first offer out of frustration. They accept the second offer because it feels slightly less insulting. They dump everything without checking for collector value. They confuse speed with fairness. Don't do that. Call around. Ask whether the quote changes with volume. Ask whether better-looking coins get separated. Ask how they settle payment. Ask whether the number is firm or just a ballpark. Ask what happens if spot moves before the deal is finished. These little details matter. A quote that sounds better can come with hidden friction that quietly takes back the difference. And let me add something else. If you're treating every old silver coin like straight junk with no chance of extra value, you can hurt yourself twice. Once on the melt spread, and once by tossing anything scarcer or nicer into a generic pile. A weak bullion market for old coinage does not automatically erase the possibility that certain pieces deserve a different look. Now, from recent Federal Reserve research, tariff effects pushed core goods prices higher into this year, and staff work estimated a noticeable boost to core goods inflation through February. Translation: cost pressure in the real economy has not vanished. Why does that matter here? Because when costs stay sticky, businesses become even less excited about carrying products that are labor-heavy, slower to turn, or trickier to hedge. So some of the caution you're hearing in these buyback quotes may not be about silver alone, it may also be about broader operating pressure in the economy. That also helps explain why peer-to-peer always gets brought up as the escape hatch. On paper, it sounds perfect. Cut out the middleman, get closer to melt, sell to another stacker. Sometimes that works, sometimes it works beautifully, but now you've traded one problem for three more: time, trust, safety. You have to find the buyer, agree on a fair number, handle payment, handle shipping or meeting, and hope the other person doesn't disappear the second the market twitches. So yes, private sale can improve your result. It can also become a part-time job. And that's what people forget when they say, just sell it yourself. Convenience has a price. Speed has a price. Certainty has a price. Right now, if you want all three at once, the market is going to make you pay for it. Meanwhile, the broader retail silver world is still very much alive. The US Mint is literally selling a special one-year Silver Eagle this year, with a 1776 to 2026 date pairing and a Liberty Bell Privy Mark, which tells you branded, recognizable modern silver still pulls attention. So demand has not disappeared, it's become selective. That selectivity is exactly why constitutional silver can lag while headline silver stays strong and modern products still get people excited. If you're successful, share your success story in the comments so others can stay motivated. And I'm genuinely curious what you're seeing out there. Are your local shops paying anything remotely decent on old dimes and quarters? Or are they acting like the stuff is radioactive unless you practically give it away? Because the emotional side of this story is real. A lot of people bought this material years ago when it felt beloved. Everybody wanted it. Bags vanished. Premiums were wild. It felt easy. It felt liquid. And now some of those same holders are waking up to the reality that the product they assumed would be simple to unload is getting treated like the awkward cousin at the family reunion. That is a rough surprise. Still, I would not confuse weak exit pricing today with a broken long-term silver case. Those are two different conversations. One is about the metal, the other is about this format, this channel of resale, and this exact moment in the pipeline. Mix those together and you'll either get way too bullish or way too bearish for the wrong reason. So here's the bottom line. If you have old 90% silver and you're thinking about selling, do not assume the first offer reflects fair value. Do not assume the second one does either. Shop it, pressure test it, separate low demand from dishonest pricing. Recognize that some dealers are protecting themselves, but also recognize that some spreads are fat enough to justify walking away. And above all, don't let a strong silver headline trick you into thinking every silver product is being loved equally at the exact same time. It just isn't. I'll keep tracking this corner of the market because it tells you a lot about real physical demand after the headlines wear off. Subscribe if you want more of these breakdowns, and keep me posted on what you're seeing. And as always, take this the right way. This is here to help you think more clearly, not to tell you what to buy or what to sell. It's education, it's perspective, and it's meant to be a flashlight, not a marching order.